But let's shift focus to the primary market. Lenskart is the talk of the town, as it's all set to open for subscription on October 31st. Strong growth numbers have been seen, but questions are being raised on whether the valuations are running ahead of fundamentals. How does it stack up against peers? Let me go across to Soumeet for a detailed report.
Lenskart is the most talked IPO on the town right now, and this is largely because of the valuations that the company is seeking. So what we have tried to do here is we have tried to compare Lenskart valuations on 3 different parameters. Firstly, at the upper end of the price band, the market cap on listing that Lenskart is seeking is close to 70,000 odd crore rupees. And based on the upper end of the price band, let's look at what are the valuations that are standing up right now. Price to sales at 10.5 times based on FY25 numbers, price to EBITDA at 71.7, price to earnings at 236.5 times. Now, if you assume that there's a 30% growth, which is a growth that the company has been doing for the last few years, if on that basis, the FY26 number or the 1-year forward number, price to sales stands at 8.1 times, price to EBITDA at 53.9, and price to earnings comes down to around 202.1 times. Now, firstly, we have compared Lenskart with its global peers. It's expensive. Very expensive, in fact, compared to what the global peers are trading at. If you look at SLR, Hoya and National Vision, they are having a price to EBITDA of anywhere between 10 to 25 times, while that of Lenskart based on FY26 numbers stands at 54 times. Price to earnings for these 3 companies stands anywhere between 38 to 45 times, while that of Lenskart stands at around 202 times. On price to sales, Hoya Corp is a bit more expensive compared to what Lenskart is, but other peers are very cheap. But these are compared to global peers, and one could argue here that Lenskart has a much higher growth vision compared to what these companies have on the global level. So that is a justifiable argument that comes in for Lenskart when compared to global peers. So second comparison is what we have done is based on market capitalization. Now, Lenskart is seeking a market cap of close to 70,000 crore rupees. So there are around 20 companies in India between the market cap of 65 to 75,000 crore rupees, and among these 20 companies, the nearest peer that we could find to Lenskart is Nykaa, and Nykaa is because both are consumer facing, both have online and offline sales, and both have stores as well in the country. So let's compare Lenskart valuations now with Nykaa. Price to sales of Lenskart is 8.1, while that of Nykaa is 7.2. On price to EBITDA, Lenskart is cheaper compared to what Nykaa is currently trading on a FY26 valuation. Lenskart valuation is 54 times, while Nykaa is trading at a valuation of 98 times. On price to earnings as well, Lenskart is cheaper at 202 times, while that of Nykaa is expensive at 316 times. And market capitalization of Lenskart is close to 70,000 crore rupees, while that of Nykaa is close to 72,600 crore rupees. And the last parameter on which we are checking Lenskart's valuation is on growth. Now, considered a high growth company, hence it is seeking a high valuation. Lenskart in FY23 to FY25, the revenue CAGR has been around 33%. So we have seen, look at the companies or top 5 companies that have revenue CAGR of more than 33% over FY23 to 25. Eternal had a revenue CAGR of around 69%, while that of Trent, Swiggy, Vari Energies and Dixon Tech was anywhere between 36 to 78% over FY23 to FY25. So let's look at these companies' valuation with that of Lenskart. Now, Eternal trades at price to sales of 6.5 times, price to EBITDA is 293 times, while price to earnings is 601 times. For Trent, price to EBITDA is 48, while price to earnings is 86. For Vari Energy, for Swiggy, we do not have price to EBITDA and price to earnings because it's still loss making, and FY26 estimates are also for loss. But for Vari Energies and Dixon Tech, the price to EBITDA and price to earnings are anywhere between 20 times to 80 times. So Lenskart might look expensive at the current valuations, but it's not the only company that is trading at that would trade at expensive valuation. There are much more companies in India that have been seeking higher valuations and are currently trading at a much more expensive valuation compared to what Lenskart is seeking here.
I'm wondering why Vari Energies and Dixon is being compared to Lenskart. And frankly, even Zomato and Swiggy is a bit of a stretch. Maybe a trend because of Titan Eye.
So this plate is purely on the back of the fact that these are the top 5 companies that have given higher growth in the last 3 over FY23 to FY25 compared to what Lenskart has given. So there are three different parameters on which we have done this, and this was the third parameter based on growth. This is not; these are not peers of Lenskart. They are just that these companies have also reported higher growth, and this is the valuation that they are seeking in the Indian market at this moment. So, given the fact that Lenskart is also growing at a rate of around 33%, the valuation that they are seeking is not much expensive compared to what Eternal, for that matter, is currently asking for.
It's a growth to valuation comparison in that particular play. Thank you for that, Soumeet. Now, this valuation question has been doing the rounds, and it's a valid one to tackle because the company is looking at a 70,000 crore valuation based on the upper end of its price band. Now, my colleague Vishwanath Nair at the press conference yesterday put this question directly to Lenskart's founder and CEO Piyush Bansal, and listen in to what was said.
Valuing yourself significantly higher than on earnings, price to earnings and price to EBITDA, according to my research team, as far as some of the international peers are concerned. I wanted to get your view as to how you are justifying this, because a lot of your revenue is also coming from international businesses, not necessarily from India. 40% roughly is coming from your international businesses. So how are you justifying that value?
मेरे को तो जस्टिफाई करना ही नहीं होता है ना वैल्यूएशन. माय जॉब इज़ पिछले 15 साल से आई एम ओनली जस्टिफाइंग द वैल्यू फॉर द कस्टमर, right? How to make the best quality spectacles every day at the lowest price possible is the job, and now to do it in international, and अगले 20-30 साल इसी में जाएंगे. ये जो वैल्यूएशन है एक मुझे समझ में भी कम आता है, but it is largely done by strong advisors, and I genuinely think as entrepreneurs it is not our job to determine valuation, but we do keep everything value for money at Lenskart. You know, whether you're at specs, and my guidance to all our advisors are we should get the best partners on board, and second, we should make sure that it is value for money.
I think you should wait for this Thursday. You will see who are the anchor investors participating, and you will find all the marquee DIIs, FIs really participating in the book. And if you ask us the question, how come they are paying the value which you are saying is high on the multiple? See, when it comes to consumer tech companies, investors look at obviously the track record of growth. It's been growing pretty fast historically, both in India and international. They also demonstrate operating leverage. So you look at the benchmarks, and obviously sophisticated institutional investors know how each of the consumer tech companies in India, and there are many of them already listed, so they have great experience in valuing these companies. So they look at those benchmarks, the way they are valued on a forward basis. Maybe institutional investors are far more equipped, and on that basis are also looking at retail companies which again trade at very robust valuations, and so also the fast growing consumer companies. They've taken all these companies as benchmark, and there are several of these available in India. It's not that you're doing on the back of just one or two companies. So trust us that it's been arrived at after a very, very comprehensive discussion with all the institutional investors. Wait for the anchor date, and you will see the quality of the anchor investors participating.